I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE symbol CRL and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome back to the show, Tim, and I hope you had a great July 4th.
Yes, sir.
Lots of barbecue?
You know, I kept it simple. We just did traditional grilled hamburgers and potato salad and baked beans.
I spent Canada Day at IKEA buying furniture. And the place was packed, so it looks like a Canada Day tradition is spent at IKEA. Oh,
and we had watermelon, and we went to see the fireworks. So we had a traditional 4th of July.
Yes, lots of fireworks here.
Yeah.
And of course, we do have fireworks across the border as well with all the tariffs. Tim, have they had any noticeable effect on the markets that you've seen?
Yes, they have. You know, everything is a process, and this has been one slow process. But here's the interesting thing. The tariffs aside, there's always that fundamental something that surfaces. And the interesting thing is that if you look at, you know, the Hang Seng and the Shanghai, it's interesting that, you know, they set up with the same structure. You know, they had the same intermediate term cycle low in February as we had in the U.S. markets. The exact same thing, exact same structure, on nearly the exact same day. I don't have it in front of me, but it may have even been the same day. And then the structure of the market, and what I mean by structure is the rhythm and the pattern of the cycles that follow, the little short-term cycle and the intermediate-term cycle itself. I know that doesn't make a lot of sense, but the price action, if you will, let's put it in those terms, since that February low, the structure of that price action is very similar across all markets. Well, it's interesting that on the Shanghai and the Hang Seng and even the emerging markets index, that structure has been fulfilled in that we've seen lower prices. We've violated those February lows. And, you know, there's always, you have the setup, and then the fundamental news comes. Well, the fundamental news that came, I guess, so it seems, has been these tariffs. And so it cracked those markets, you know, below those February intermediate term lows. So, you know, higher degree technical dominoes have fallen, if you will. At the same time, if you look at the U.S. markets, for example, the NYSE, and I just went through a bunch of charts making sure before we came on the air to looking at the structure and make sure nothing has changed. But if you look at the NYSE or the Dow itself or even the S&P, we still have the same structure. We still have the February low. We still have the same intermediate degree structure of the cycle that has followed that intermediate degree low. It's just that we haven't violated, we haven't broken yet. But the same structure there that is conducive of that break is in place, if that makes sense. Then if you dig and you look at, like, you know, the Dow Jones World Stock Index, well, guess what? We have the same structure. You look at the NYSE World Leaders, we have that same structure, but again, they haven't quite cracked. Then if you look at some of the sectors within the U.S. market, such as housing, again, they had the same structure, but in these cases, or in a few of the cases, they have cracked. In other words, they have violated that negative structure that's set up following the February low, and one example is housing. Another example is the airline index. I like the airline index. It's a good proxy for the cycles in and of themselves. And so, yes, we're seeing some cracks, and yes, it looks like the tariffs is, you know, the alleged reason that we've seen the weakness following the technical setup.
Would these weaknesses have happened without the tariffs?
There's always something. That's the great debate. What comes first, the chicken or the egg? But, you have to have the cyclical, structural, technical, however you want to say it, set up in place for the move to occur. And that's been the frustrating thing all along with this bubble as it has stretched and stretched and stretched. We'd try to get set up and it wouldn't happen. We'd try to get it set up and it wouldn't happen. And it just keep getting blown out with the bubble. Well, now, we had the top in January and we had some structure bite. And here we are. So now the next technical domino has fallen. So the answer to the question, without the structure being in place, it couldn't have happened. With the structure in place, there's always something that surfaces. So I would say, well, I guess I answered the question. You have to have the structure. And who knows what the skeletons that are going to always come out of the closet, but they always do. Just like with the top in 2007. We had the setup in October and into November. And then, all the stuff that came out. There's skeletons in the closet with these other markets. With the European markets. There's skeletons in the closet with the U.S. markets. I don't know what is going to cause, the news reason that's going to be given for the break, but, there's something out there. Don't know what it is.
We'll have more with Tim Cyclesman Wood right after the break.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test numerous targets located by recent groundwork is planned for early 2018. Please visit our website at rmroyalty.com.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, what's happening with crude? Because it has such an effect on the value of the Canadian dollar.
Yes. Crude and commodities in general. Let's start with commodities in general. Well, no, we can start with crude. We had coming into June, we knew that, and there still is a longer term there's an annual degree cycle top and a 3-year cycle top. It really looked like that top was in place in crude. We had a low, I think it was in mid-June, June 18th, I think it was. And then crude oil managed to push to a new high. And that was not expected. But it did. That does not change the fact that we still have this intermediate and 3-year cycle top due. I think what we've seen is just another push up into that cycle top. And a clue that this was just another push up is that if you look at like oil services, which obviously is some of the oil service stocks, centered around the oil industry, if you will, they have not confirmed, this advance in crude oil. So that in and of itself is an indication. When I say they haven't confirmed, they have not moved back above the previous, cycle highs. So there's a non-confirmation, if you will. If you look at the CRB index, we had a low in mid-June, June 19th, and the same thing. It has not confirmed the advance in crude oil. In fact, there was a short-term sell signal on Monday on the CRB, and it never triggered an intermediate-term buy signal to advance. The intermediate-term sell signal stood. So I think what we have seen is another hoorah. It's not wanting to give up the ghost, but the longer-term cycle tops are still due in the commodity complex as well. And I stick to what it appears to me that is happening here is that everything is trying to set up into these longer degree tops. It's taking forever for it to materialize, but I think that's what is happening. When I say everything, commodities, equities, the whole thing. And, the dollar remains strong. I think in January, you asked me what one of the big moves or one of the big surprises or something would be in 2018, and I said the advance in the dollar. And, we have an intermediate degree low due in the next few weeks. The dollar is not even wanting to give in to the pressures of that low, which in and of itself obviously is a sign of strength. And I think ultimately the dollar moves higher. Commodities peak in conjunction with equities. We have to see, the rest of these technical dominoes fall to set the stage. But I think that's the direction we're headed. And then, with gold, we have a short-term low. We had a short-term buy signal a couple days ago, and no, we didn't. I'm sorry. We should have had a short-term buy signal today. I don't have the data. We had the short-term. We moved through the timing band for the short-term low a couple of days ago, so this low is running a little bit long. I suspect we probably saw a little short-term buy signal on gold today, but it should be a counter-trend advance, and I'm still thinking lower in gold prices as well.
We'll have more with Tim Cyclesman Wood right after this.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the U.S. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the U.S. and GET in Canada. Find out more at glancepay.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, do you think these tariffs were imposed to drive inflation higher, or was that just an accidental thing?
I think it's probably an accidental thing. I don't know what the intentions really were. I've watched so little news. People don't understand. When I say I don't watch TV, I literally do not watch TV. So, I had heard about it from people talking, and someone sent me a text, but I don't follow the fundamentals. So I think it's just a coincidental thing. Like I said, there's always some kind of news that comes out that is attached to an event in the market, and from a technical perspective, the setup has to be there, and that's where I focus.
Do interest rates follow a cycle as well as other things?
Of course they do, and I think one of the other great surprises. Let me back up for just a second, and then I want to answer that question. One of the big surprises, like we said, was the advance in the dollar this year, and I think there's much more strength to come ultimately. One of the big disappointments this year has been gold. And, I was concerned about the 9-year cycle. I lost sleep over that, because, was the 2015 low, the 9-year cycle low? Was it not? Had the cycle extended? We had to work through a certain time frame before we could confirm. But yes, it was. The 2015 low was the 9-year cycle low, and now that top is at risk of failing. And so that is a big disappointment this year for myself and others. I was thinking that there was going to be a big opportunity with gold and the gold stocks. And then the other surprise, getting to your question with interest rates, is that, people are looking for rates to rise here. And I'm not so sure about that. As I look at this, I think that you talked about cycles. I think that, we should have had, timing wise, it's a 3-year cycle in bond prices themselves. I think that cycle has bottomed. I think it's getting off. I think the advance out of that low is getting off to a slow start. But I think that low is in place, and I think another big surprise that's coming is going to be actually lower rates instead of higher rates as that cycle advances. That's the way it looks like it's setting up to me now. Now, everything cuts two ways, and if we start to see this cycle fail, then it's going to fail big, and that would be a big problem for bonds. And of course, then I would say that, obviously that'll have the opposite effect. Rates will rise, but I don't see that. I just don't see that.
Tim, thank you so much for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. Our YouTube channel is Talk Digital Network. Questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.